Welcome to our budget special. I'm Ritu Singh, and here are the headlines that we're tracking this evening. Finance Minister Nirmala Sitharaman records setting seventh consecutive budget, focuses on continuity and growth, uses the cushion from a higher dividend from RBI and public sector companies to enhance and introduce certain welfare schemes and incentivize employment generation. Allocation to capex, defence and subsidies remains the same. So does allocation towards Prime Minister Kisan and Manrega. The government continues to aggressively walk the fiscal consolidation talk. Budget 2024 pegs fiscal deficit for FY25 at 4.9% of the GDP against the interim budget's 5.1%. Finance Minister targets a deficit below 4.5% for FY26. Minister Sitharaman proposes hiking short-term capital gains on certain financial assets to 20%. Long-term capital gains tax is hiked to 12.5% on financial and non-financial assets. Finance Secretary Somanathan clarifies that the idea was to bring equity in capital gains taxation, also rules out further hike to capital gains tax for now. Real estate investments lose the benefit of indexation, which allowed property owners to adjust their gains for inflation. Finance Secretary clarifies that the tax incidence under capital gains without indexation is actually lower and will benefit a lot of people. Adds that indexation benefit will attach to properties bought before 2001. The Finance Minister moves to deepen the tax base by taking advantage of rising retail investor participation in derivatives trading. Proposes to hike securities transaction tax on future contracts to 0.02% and an options contract to 0.1%. The changes will be effective the 1st of October. Big relief for individual taxpayers under the new tax regime. The budget proposes hiking standard deduction to 75,000 rupees from the current 50,000 rupees. Also tweaks tax slabs to lower the overall tax incidence. The Finance Minister says changes will help a salaried employee save up to 17,500 rupees a year in income taxes. At 14.13 lakh crores, the government's gross market borrowing numbers are largely unchanged from those presented in the interim budget. The Finance Minister promises to try and keep the central government's debt on a declining path as a percentage of GDP. Divestment revenues forecast also unchanged at 50,000 crore rupees. A roller coaster ride on Dalal Street as Sensex and Nifty recover in late trade after a sharp drop. Mid-caps and bank stocks see sharper cuts. India's startup ecosystem's long-standing demand to become a reality. Finance Minister Nirmala Sitharaman abolishes the angel tax for all investor classes. Says the move will bolster their entrepreneurial spirit. Startups laud the announcement, expect funding into the sector to go up. E-commerce companies also get a breather. The budget proposes withdrawing the 2% equalization levy on consideration received from e-commerce supply of goods and or services effective the 1st of August. Startups can also breathe easier. The Finance Minister proposes abolishing the angel tax for all classes. Made in India mobile phones, electronics, gold and silver and platinum jewellery may get cheaper. The budget proposes lowering custom duties on a host of input products for these sectors. The budget announces a slew of measures for coalition partners in Andhra Pradesh and Bihar. This includes a 15,000 crore rupee assistance through multilateral agencies to build a new capital in Andhra Pradesh. Bihar will also get 26,000 crores to build highways and promises of additional support to build new airports, medical colleges and sports infrastructure. In other headlines, the Supreme Court declines to scrap the NEET UG exam for aspiring medical students, rules that there is no systemic breach to the sanctity of the exam while admitting to the absence of sufficient material on record. Hindustan Unilever's first quarter numbers beat estimates. Profits rise 2% and domestic volume growth comes in at 4%. The management expects a gradual recovery in rural demand. And Kamala Harris races towards the Democratic Party's nomination for the White House, gets support from enough delegates to clinch the nomination. A new poll shows Harris is outperforming Biden but still trailing Trump by 2 percentage points. Those are the headlines at this hour. Shereen Bhan will be joining us with special guests in just a bit. But before we get to them, here are some glimpses of Finance Minister Nirmala Sitharaman presenting her record 7th consecutive budget and the reactions that has evoked.
short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. I propose to abolish the so-called angel tax for all classes of investors. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. The standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. This year, I have provided 11,11,111 crore rupees for capital expenditure.
ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है।
हम लोगों ने एक कह दिया कि विशेष राज्य का दर्जा दीजिए या विशेष अधिकार के लिए मदद दीजिए। यहाँ के लिए जो जरूरत है बिहार के लिए, क्योंकि बिहार को भी आगे बढ़ना है, तो बहुत कुछ किया है, आप जानते हैं।
इस बजट में बिहार फर्स्ट, बिहारी फर्स्ट को भी धरातल पर उतारने के प्रावधान दिए गए।
आंध्रा की बात जब आती है तो उसके लिए तो मैं तहे दिल से शुक्रिया अदा करना चाहूँगा नरेंद्र मोदी जी को, जिन्होंने एक वादा किया था कि आंध्रा की देखभाल हम करेंगे और उन्होंने आज किया है बजट के रूप में।
किसान, गरीब, महिलाएं, युवा और मध्यम वर्ग के कल्याण पर विशेष रूप से ध्यान दिया गया है।
Finance Minister had an opportunity to read the Congress manifesto after the Lok Sabha 2024 elections. She has virtually adopted the ideas underlying our proposals.
There was no mention of Manrega. There was no mention or insufficient mention of any steps taken to improve the income of the ordinary person.
Hello and welcome to the CNBC-TV18 Budget Town Hall. I'm Shereen Bhan. We've been decoding the budget fine print for you since the budget was unveiled by Finance Minister Nirmala Sitharaman, her 7th consecutive budget. We are now joined by captains of industry to talk about the impact and the implications. A power-packed panel: Sanjeev Mehta, Executive Chairman of L Catterton India, the former MD and CEO of HUL, Anish Shah, the President of FICCI and the CEO of Mahindra Group, Zareen Daruwala, the CEO of Standard Chartered India, the President of ASSOCHAM, Sanjay Nair, with us, also Sanjeev Krishnan, the chairperson of PwC in India. Gentlemen and Zareen, many thanks for joining us here on the CNBC-TV18 Budget Town Hall. Sanjeev Mehta, first to you. A long speech, given the fact that the interim budget was barely 56 minutes. There's many changes. The priorities and the thrust areas remain similar to what we've seen announced by the Finance Minister in her previous budgets. What would your first take be on the impact of this budget, what it can do?
Before I talk about what the impact will be, let us take a step back and see where India is today. Yeah, if we compare India pre-COVID to where we are now, we have grown our economy by 20%.
Yeah.
And it's only India and China which have done that. Look at UK or France, they are just 2% above pre-COVID. Or look at developing country like Thailand, which is at the same level as pre-COVID. So we have done remarkably well. And in the last 3 years, growing upwards of 8% has been phenomenal. The second bit has been, look at the last big crisis, the global financial crisis. When the Fed said taper, rupee crashed. Today we are talking about a scenario where we have over $650 billion, which can cover our external debt. Our inflation today has been contained, and it is lower than many developed countries. So we are at a great position of strength. And from there, if we look at, I think what Madam Finance Minister has done, looked at certain structural issues, and she's tried to bring about a change. Let me talk about the biggest challenge that we face today. 60% of India lives in rural areas. 45% of the working population is in agri sector. And agri sector contributes 17% to the GDP, which is growing at about 1.5%. And even if you look at a past 30-year period, the agri sector growth has been at half the rate of the country's GDP. That's a non-sustainable. So what Madam Finance Minister, if you look at the thrust area, she has put in huge emphasis on agriculture. Earmarked about 1.5 lakh crore. The second important bit is, the other aspect that I would say is soft. You look at the private consumption, which has grown at about 4%. Whereas rest of, from the demand perspective, if you look at, they've grown at services at 7%, industry at about 9%. So that again is an area of concern. So what she's looked at, if I were to pick up from a manufacturing perspective, she's saying India is going to have multiple strategies. We need manufacturing, which is labor intensive. At the same time, she's very clear, we have to go up the value chain. So there is an enhanced focus on R&D and innovation. Whether you talk about modular and small nuclear reactors, or you talk about bringing in technology, digital public infrastructure in agriculture, or very importantly, the 1 lakh crore that was articulated during the interim budget. And now Madam Finance Minister is saying, yes, we are going to be led by the private sector. We must accept that India has to become a product nation. And India is not an either-or strategy, which often gets debated. We have to grow our agri sector, we have to grow our manufacturing.
And we have to grow services.
And services, if you look ahead, it will be impacted by AI. So we need to ask ourselves, what do we need to do to ring-fence services? So if you look at those 9 thrust areas, you know, of course, a lot of them will be based on the policy that gets articulated later on. They're absolutely bang on. That's what the country needs today.
Well, the intent, I think, is the point that you make is taken. The question now is one of execution, and many of these schemes will be in different phases of how quickly they will start to result in impact.
Shereen, let me give you one very interesting statistics. Go back to 2019-20. Our total capex, including the outlay that you have grants that go for capital, was 5 lakh crore. Today we are talking about the 7 ones plus 3 odd lakh crore, that totals up to 15 lakh crore. It's gone up 3x. Now the interesting bit is, in 2019-20, the total tax collection was 13 lakh crore. Today we are talking about 26 lakh crore. So out of the delta 13 lakh crore, the government is putting 10 lakh crore in capex, which is the right way to do. That's a productive expenditure. Rather than putting it under revenue heads or under administration of the government, which would not have yielded the kind of benefits it has yielded and it will yield in the future. So from that perspective, I'm very pleased with the thrust areas of the government.
Well, pleased with the thrust areas of the government. That's the first word in from Sanjeev Mehta. I have many more questions for you, but let me get Anish Shah into the conversation as well. Anish, you've been with us through the course of the day, analyzing what the budget has been able to deliver on. And, you know, to take forward what Sanjeev Mehta was saying, we find ourselves in a position of strength. Many are calling it India's sweet spot. In terms of both investment as well as consumption, Anish, does it really make a significant difference, or do you believe that the kind of growth momentum we were already seeing, that will only be further bolstered by the measures taken?
Shereen, the growth momentum that we've seen has been the result of a number of actions that have been taken. And Sanjeev mentioned the capex that we had seen in 2019 and the growth we've seen in that time period. If we just take last year's budget, it had a 34% growth in capex. So those actions have helped us get that momentum. And budget is always a tricky exercise because everyone wants everything. And as we've gone through today and done a detailed look at even the fine print, I'd say this is a very impressive budget. An impressive one because it manages to address a very large number of issues and keeps us on that path, on that momentum that we have achieved already by maintaining capex at a reasonably high level of 3.4% of GDP. Also, as Sanjeev said, you've taken literally the 10 lakh crore extra that has come in to fund capex because it has a greater multiplier effect. It has focused on agriculture. It is inclusive in many ways, having addressed the needs of women, farmers, the poor, the youth. Job and skilling is a significant focus for the budget, and technology. So a large number of areas have been looked at while maintaining fiscal discipline and getting to 4.9%, which is a tough act and has been done extremely well.
Yeah, Shereen, let me come to you now with some of the other changes that came in, and many changes this time around on the tax front. I think the long-term capital gains tax changes, people were hoping that it wouldn't be the case, but it has happened. And of course, the changes that have happened with respect to doing away with the indexation benefits, that certainly has many concerns, especially from the real estate sector's perspective. Other changes as well, the angel tax being abolished, the equalization levy being done away with, the corporate tax cut for foreign companies in India. Zareen, on balance, the tax announcements, what's your big takeaway on the impact?
I would say, Shereen, that, I heard some of the conversations with Mr. Somnathan, etc. Actually, 20% coming to 12.5% to some extent takes care of the indexation benefit being taken away. On foreign companies, tax coming down actually in September 19, when the tax was reduced from 30% to 22%. For foreign companies, it did not come down. So there was an 18% gap between foreign companies and domestic companies, if you exclude the surcharges. So to that extent, I think this gap has been to some extent narrowed. That is what I would say. And frankly, the real estate momentum continues. If we see H1 this year, we've had 35 million square feet of residential sales. To my mind, that momentum is going to continue. Also, one other point, while we are talking of fiscal prudence, I think the fiscal deficit coming to 4.9%, government borrowing will be lesser. With the JP Morgan index inclusion, what we'll see is there'll be a good amount of demand for government paper, and that will bring down interest rates for sure. So this, to my mind, is a very big positive of lower fiscal deficit and index inclusion coming around the same time.
Yeah, that fiscal deficit number being brought down to 4.9% and then 4.5% for the next year. Sanjay Nair, what do you like from what the finance minister has delivered with Budget 2024?
Not being populist. They could have used that 2.3 lakh dividend and they could have stuck to 5.1 and they could have splurged. So I think it's a pretty bold budget from a political point of view of taking the long, arduous route of creating jobs. Well, first the MSMEs, the environment, the jobs, and then the core sustainable income of the people, which will drive consumption. So I think it's the right way to do it. I actually didn't think that was going to happen. So I'm pleasantly surprised. As a result, I think you're sitting with a pretty strong balance sheet at a country level. I still agree. I still think total debt to GDP is high. Deficit is going down, but the total debt is still high. I think these next 6 months, Shereen, for the next budget, we can look for a lot of things, but I think simplification of life, as defined by simplification of taxes, TDSs, GST, the IT review of 1961, if all that can get done in 6 months, I think you begin to crowd in, as we have spoken earlier, crowd in the private investments and the private capex, and that's where the SMEs begin to come in. So frankly, you've got a pretty good, after 2-3 years after COVID, this country has a very solid balance sheet. it can get even better. And frankly, they can't do anything more than this with a balance sheet, which is where it is. I think the final thing is they're crowding and saving. I think Shereen just said the way they have tackled the deficit, and hopefully they borrow lesser or same as last year. Of course, leaving the contingencies on geopolitical crisis, you will automatically have a more attractive rate structure. So, private sector in India cannot have a better cost of capital environment with underlevered balance sheet, booming capital markets. So I think it's got to be really the ease of doing business, the cost of doing business, and the consumption capex gap has to begin to bridge. And frankly, it's not only the government's job to do this, right? Even jobs and skilling, they have put it back into the private sector's court and said, look, here is some PLI kind of thing. You guys always react to incentives. So we'll go hire people and skill them accordingly. So I think it's a pretty well thought out budget. I think it was better than I thought because it is not populist at all. And, but having said that, maybe we'll talk later, but I think there is still things to do to reduce the total debt to GDP. There's enough to monetize out there. And, we have spoken about that before, and maybe we'll pick it up later.
Yeah, and miscellaneous receipts, 50,000 crore rupees, that is what has been provisioned for in the interim budget and now in this budget as well. 6 months later, we've just come off a budget. I mean, we did a budget 5 months ago. We're doing a budget today, and another 6 months, we're going to do another budget. It is, I don't want to think about that just yet. Let me welcome Ratin Roy into the conversation as well. Ratin, thanks very much for joining us. I'm coming to you in just a second. Sanjeev, your take from the many announcements that came in significantly, the impact as far as the moves on FDI, or at least the intent to move further on FDI, as well as what they've been able to do to get rid of some of the pain points for the VCP community.
Shereen, I think first of all, I just want to say that we've been discussing the 4.9. I think it's eminently achievable. I think they've been very, very conservative, both in terms of their revenue collections, particularly on GST. If you compare it with the interim budget to what they're budgeted now, I think they were estimated lower. I think even the denominator is, I would have expected it to be higher because there is inflation. So I think it's eminently achievable. But for some of the stuff that they have, for expedient reasons, put in the budget, the 4.9% I think is eminently achievable, and it sets us on a very good fiscal path. I think some of the things that you mentioned, I think the taking away, for instance, of the angel taxation, I think it was possibly not, to the best of my mind, not creating a huge amount of tax revenues, but it was being too litigious in minds of many. And of course, it's about desirability, about India as an investment destination. So I think that was, to me, a very critical step. I think the two issues which we have been talking about, particularly employment generation, I think that's something which has been addressed in a very significant way by all the effort that has gone in terms of skilling, etc. And in a way, for some of the large corporations, in fact, there is ask is to walk the talk, and I think it's a very, very good one. Whether you look at the GCC story, which requires significant skilling efforts, because now we're moving from cost arbitrage to really doing some value accretive work. I think the whole skilling gap, bridging the skilling gap, will hopefully create significant employment. And of course, with the MSME, a bunch of norms, a bunch of things that have come on for the MSMEs in terms of credit lines and others, I think it will certainly help because the question really was that I'm willing to invest, but does India have the supply chain to be able to make sure that I can create sustained scaled businesses over a period of time? And I think that's something which has come through. I think on the ease of doing business, I completely agree with Sanjay. I think there is some more work to be done, but even steps that have been taken today, including, how do you, let's say, shutting down an LLP if you so wish on a voluntary basis, the whole scheme about coming up with the variable companies, capital companies. I think these are very good steps, and many possibly present in many other parts of the world. So I think these will again be significant incremental incentivization. They spoke about FDI, and I think that they've spoken about declogging the FDI piece as well. I didn't see anything very significant on the FDI pieces, but I think just making India easier to do business and making sure that there is
and the measures, the specific measures are yet to be rolled out. The intent is to roll those out, and we did have the Economic Affairs Secretary give us an indication or a glimpse of
Yeah. Yeah, if you can give, please. No, for the feed, the studio feed.
Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses.